You blame bad markets or unlucky trades for blowing up your account, but that's dead wrong. Ask yourself, when was the last time your wipeout hit on a perfectly tradable day? Just one impulse overriding your risk rules. 90% of traders who blow out do exactly that. My $50,000 loss, it wasn't a black swan. It was me chasing a Tesla loser, doubling down like an idiot, turning a 2% dip into a career-ending crater. Here's the thing. Elite traders like Bill Lipschutz, yeah, the guy who turned $12,000 into $300 million at Salomon Brothers, blew his first 300K account sky high for the exact same reason. Impulses hijack discipline, one unchecked urge, and your scratches become graves. You felt it, that revenge trade bubbling up after a loss, haven't you? Think about it. What if psychology isn't your side hustle, but your primary edge? Stick with me, and you'll master the mental framework that separates pros from blown-up dreamers. I'll show you how I clawed back from that 50K hellhole, and the counterintuitive tricks Lipschutz used to dominate. I'll share the exact reset technique in a moment. So what really sparked my disaster, and how can you bulletproof your mind before yours explodes? Let's dive in. Picture this, it's early 2022. Crypto winter's biting hard, and you're me, staring at your screen, heart pounding. I'd nailed a few wins on volatile names like GameStop and AMC, riding that meme frenzy to 15% gains. Confidence through the roof. So when Tesla dipped 5% on an Elon tweet storm about Twitter drama, I loaded up, triple my usual size, 10% of my portfolio on one over-leveraged position. FOMO screamed, "This is the bottom. Ignore the stop at $950. Yeah, I did. It dropped 15% to $830. Panic sets in, but here's where it gets interesting. You know that voice saying, just a little more, it'll bounce. Revenge trade number 2. Double down on a loser at $820, chasing break even. By day 3, a survivable 2% risk had ballooned to 25% gone. Then the calls to margin brokers. Poof, $50,000 vaporized. Not a market crash, not bad luck. Me overriding my own rules because my brain craved the win more than survival. You've been there, right? Ask yourself, in your struggling beginner phase, did you really think perfect entries or hot tips would save you? I did. Cut losses short, let winners run, they say. Bull. Without psych guardrails, it's lipstick on a pig. Brazilian SEC data from 2019 to 2023, 90% of retail blowups happened on normal volatility days under 1.5% VIX. Your impulses turning 1-2% scratches into 50% wipeouts. LTCM's geniuses, same story. $4.6 billion lost in 98, not to black swans, but ego-fueled 25-to-1 leverage bets on Russian bonds. Think about it. You blame bad markets or unlucky trades. Dead wrong. Catastrophic drawdowns, pure psychological overrides. Your amygdala hijacks the plan, revenge trading kicks in, and suddenly you're the blown-up trader posting sob stories on Reddit. But here's what nobody tells you. Psychology isn't secondary to charts or indicators. It's your primary edge. Elite survival demands it. Losses like mine, they accelerate learning exponentially, but only if you survive. I'll show you how with data from 500-plus pros who've clawed back millions. But first, why your biggest losses are secretly your best teachers. Your biggest losses, they're secretly your best teachers. Yeah, you heard that right. That $50,000 gut punch I took, it didn't just burn, it forged me. Here's the thing. Everyone preaches cut your losses short. Solid advice. But the real truth? Catastrophic drawdowns like mine force pattern recognition that tiny 1% wins let you ignore forever. Small wins feel good, but they lull you into skipping the hard lessons. Think about it. You're grinding small scalps on EUR/USD, patting yourself on the back for a 60% win rate. Feels good, right? But complacency creeps in. You skip journaling, overlook that nagging tilt after 2 losers in a row. Consistent small winners, they plateau you at mediocrity. No fire under your ass. But here's where it gets interesting. Losses, they're the fire. They burn hot, but man, do they teach fast. Like stepping too close to the flames, warmth whispers lessons. Third-degree blisters scream them into your soul. You survive a 25% drawdown, and suddenly every emotional trigger lights up like a Christmas tree. Revenge urges, crystal clear. FOMO blinders, gone. Don't just take my word. Brett Steenbarger's the daily trading coach, crunched data from over 500 pros. Survivors of 20 to 30% drawdowns, they boosted win rates 15 to 25% within a year. Why? Pain etched unbreakable rules into their brains. Your amygdala, that fear center, finally syncs with your prefrontal cortex. No more overrides. Look at Larry Williams, the struggling beginner in the 1970s, dumping 50K plus into pork bellies on a revenge streak after a 12% gap down. Markets turned, he was wrecked. But he journaled every impulse, every dumb size up. Fast forward to 1987 World Cup Trading Championship. Guy turns 10K into $1.1 million, an 11,000% return. Not better charts, deeper psych rewiring from that blow up. You felt it too, haven't you? That post-loss haze where excuses pile up. Bad fills, whipsaws. Bull, it's your brain dodging the mirror. But reframe it. Every blown account is tuition for elite trading. Steenbarger's pros prove it. 90% of long-term survivors had at least one 30% plus scar. They clawed back millions because survival enabled success. Here's what nobody tells you. Small wins breed arrogance. Big losses breed humility and edge. My 50K wipeout, journaled it raw. Spotted my just one more pattern. Win rate jumped 18% in 6 months. Yours can too, if you survive. But even those pros blew up first on sizing mistakes. Think position sizing trumps perfect entries 10 to 1? Hang tight. I'll prove it next with the math that saved my ass from another crater. Think position sizing trumps perfect entries 10 to 1? You're damn right it does. Let me prove it with cold, hard math from my 50K graveyard and Van Tharp's data on 5,000 real accounts. You obsess over entries, right? Pinpointing that golden EUR/USD reversal at 1.0850 with a perfect pin bar. Textbook. But here's the killer. If you bet 5 to 10% of your capital, a 10% stop loss torches just 0.5 to 1% as your stack. Smart. Survivable. Now crank that to 50% of your portfolio, like I did on Tesla, and that same 10% adverse move, boom, 5% wipeout. One trade, your edge evaporates. Tharp's research nails it. Position sizing drives 50% of your return variability. Entries, a measly 5%. Your holy grail timing, it's noise. Here's what nobody tells you. Even ironclad sizing rules crumble under psych impulse mid-trade. You're up 2%. Just let it ride. Stops at break even? Nah, move it wider to 20 pips. Brain whispers you're a pro now. Override. And poof, your 1% risk balloons to 4%. Happened to me on crude oil futures at $75 per barrel. 10K position. Sizing cap? Forgotten. Drawdown? Catastrophic. Look at Bill Lipschutz. 1982 Salomon Brothers hotshot. 300K USD JPY position at 250 yen. Ignored his stops chasing a yen bounce to 240. Wiped clean. Peers, revenge traded into oblivion, quit the game. Bill, reset, capped every bet at 1% risk. Rebuilt to $300 million a year in profits. Read easy money, he admits it. Sizing wasn't math, it was psych armor. I'll share his exact reset technique shortly. Rule of 3 for you. Size small, never over 2% risk per trade. Stop hard, no mental ones at 15 pips. Journal why you bent the rule every damn time. Do this and your 50K nightmares become 1% speed bumps. Tension eases, right? That knot in your gut from oversized losers? Gone. Hope hits, simple fix, massive edge. My journal post-blow up spotted the pattern. Feeling invincible triggered 70% oversizes. Fixed it. 6 months later, max drawdown halved to 8%. Yours can too, if you enforce it. Lipschutz survived that psych reset. But post-loss, your brain's revenge dopamine hijacks everything next. Ever doubled down on a loser praying for mean reversion? That's the martingale myth waiting to gut you. Stick around. I'll unpack how it turns pros into beggars. Revenge trading. It's your brain's dirty little addict whispering, one more trade, double down, get it all back. You felt it, right? Ask yourself that red-hot urge after your last loser, what stopped you? Heart pounding, fingers itching on the buy button. Here's the thing, it's not willpower you lack. It's dopamine hijacking your prefrontal cortex, the rational boss in your skull. Science backs it. Kunin and Knudsen's 2005 fMRI study in Neuron scanned traders' brains. Anticipation of a rebound, dopamine floods, logic, offline. Result, you chase ghosts. Brazil's SEC data, 73% of day traders blow up within a year. Not from bad setups, from this impulse. Think martingale myth. You average down on that GBP USD short post-Brexit at 1.3200. Mean reversion's coming. Ad size at 1.3150. Pray. But markets don't care about your prayer. CXO Advisory backtested S&P strategies, 1970-2020, averaging down, 2.5 times worse drawdowns than hard stops. Compounds geometrically. Your 1K loser becomes 10K, then account dust. But here's where it gets interesting. Meet Naomi Paul, 2018 prop trader, 100K account. Flash crash hits GBP USD to 1.3000. She averages down 3 times, just needs to bounce. Wiped, fired. Her mates blamed rigged markets, revenge traded into quitting. Naomi, brutal honesty, relaunched with 0.5% risk caps. Now pulls consistent 20% yearly. Contrast that, her impulse said fight back. Sanity said walk away. Victor Niederhofer, genius. Shorts tie bot volatility with $100 million at 25 bot USD. Averages in as it spikes to 55, blows up spectacularly. 2007, does it again on subprime with $200 million gone. Markets laughed. His edge, math wizardry. His killer, unchecked revenge dopamine. You're nodding, aren't you? Because you've done it. Like that one more after my 50K scar story. Tension builds. Discomfort hits. Your habits are the villain. Here's the counterintuitive twist nobody admits. Revenge feels like control. It's chaos. Rational sizing, boring armor. But it turns beggars back to pros. But why do you skip the one tool that exposes it? Hold that thought. Your weekend ritual to autopsy trades like a crime scene. No more blind revenge. Journals expose paper trading lies too. But first let's crack open your skull with forensic journaling. You're thinking journaling? That's busy work for newbies. Wrong. It's your scalpel. Mark Douglas and Trading in the Zone nailed it. Traders who journal/execution errors by 40%. Why? Your gut feels sure things? 80% flop under the microscope. FOMO whispers this one's different. Write it down, watch it bleed. Here's the thing. You skip journaling because facing your impulses feels like staring at roadkill. But think about Larry Williams. Blew his account chasing soybeans in 1987 to $11 a bushel. Revenge mode. He started journaling every trade, entry trigger like FOMO at open, emotion score from 1 to 10, exit rationale. Post losses only? No, every damn one. By championship end, $10,000 into 1.1 million. Not luck. Dissection. Picture this, you're the blown-up beginner Alex, $20,000 account. Euro USD gaps against you from 1.0900 to 1.0870. You pyramid in, heart pounding. Journal? Nah. Delete history. 6 months later, broke. Contrast Sarah, the consistent pro. Sunday ritual locked in. She reviews P&L, wins at 2.1 R average, losses 58% win rate. Then the killer. What if this loss doubled to 2%, tripled to 6%? Simulates ruin. Tay research data. Traders doing this jump survival rates from 25% to 62%. Let me tell you how to own it. Friday close. Log 3 things. 1. Emotional state pre-trade. Fear at 8 out of 10. Greed, boredom. 2. Did you follow your 1% risk rule, or fudge position size to 3%? 3. Post-trade. Rate your discipline 1 through 10. Weekend autopsy. Sunday 30 minutes. Pull charts. Replay decisions. Ask, would I take this again with real skin at 1.0850? Write the fixes. Repeat weekly. Feels mundane? That's the point. Heroes chase dopamine. Survivors stack edges. Here's what nobody tells you. Journaling turns your $50,000 scar into a professor. Empathy for that struggle? I get it. You're slammed. Charts calling. But skip it and revenge owns you. Nail the ritual. Quantify the wins. Error rates drop. Drawdowns have. Tension releases. Satisfaction hits. You're feeling it now. That shift from victim to architect. But journals expose another trap. Paper trading profits inflating your ego like a balloon ready to pop. Hold that. Your sim account's lying to you next. Your sim account's lying to you. Pumping up that ego like a balloon ready to pop. You've nailed 20% returns paper trading for months. Feels invincible, right? Here's the thing. Paper trading lacks the cortisol spike that sharpens your real edge. APA's 2017 study. Real money traders outperform Sims by 12% on Sharp ratio. No skin in the game, no sweat. Your brain chills, skips the hard filters. Think about it, you're practicing golf with no wind. Then, step into a hurricane. Let me tell you about the ultimate hubris trap. Even Nobel geniuses fall. Picture LTCM in 1998. Myron Scholes and Robert Merton, Black-Scholes rock stars, launch a fund. $4.6 billion collapse in 4 months. How? 25-to-1 leverage on safe Russian bonds. Default hits, fat tails they ignored, 92% wipeout. Scholes later admits, we didn't model the unmodelable. Brains like theirs, yours does it daily, pyramiding into losers because this time's different. You're the struggling beginner here, staring at green sim bars on BTC USD, itching to go live with 5% risk per trade. Heart races? Nah, mouse clicks feel free. Tension builds as you scale up live. First loss stings at minus 1.2%, but hubris whispers, double down, you're a pro. Boom, drawdown spirals. Empathy for that rush? I blew 12K chasing sim wins early on. Felt like a genius, till reality bit. Here's what nobody tells you, counterintuitive as hell. Paper trading builds overconfidence faster than it builds skill. Rule of 3 traps. 1. No emotional feedback loop like revenge post-loss. 2. Ignores 2 pip slippage and $5 commissions eating edges. 3. Fat tails hide in calm sim seas. Contrast the consistent pro. They cap paper at 20% of practice time, then live micro lots at 0.1%. Your journal flags it. Rate that sim to live drop-off weekly, like my 18% win rate dip. Guardrail, mandate 50 live trades matching sim setups before scaling. Survival jumps. This is crucial. Psych Edge demands skin in the game. LTCM's geniuses had billions, still crumbled to impulses overriding models. You, start small, feel the burn. Hope hits when you quantify it. Hubris errors plummet 40% with hybrid practice, per trader psych data. Recap the scars we've unpacked. Revenge skips from Naomi Paul, journal skips like Alex, now this paper illusion tying back to my Tesla oversize. All roads lead here. Your psychology isn't secondary to charts. It's your primary edge. But wait, the 50K bombs core detonator? One impulse ties them all. Stick with me, transformation's next. All roads converge right here on that one detonator. Your unchecked psychological impulses overriding every risk rule you've sworn by. Think about it. You nail a setup. Losses teach you resilience like Larry Williams' pork bellies. You size positions right at 1% max as lip shuts reset. You slaughter revenge trades and martingale madness from Niederhofer's bot disaster. You journal religiously with Sunday rituals. You ditch paper trading's hubris trap. Yet one whisper from fear or greed, boom, 50K vanishes. Not the market, not bad luck. You. Here's the aha that hit me like a freight train after my blow-up. Catastrophic drawdowns aren't market vengeance. They're your impulses hijacking the wheel, turning a 5% Tesla dip into account Armageddon. Elite traders like Lipschutz knew it. He turned 12K into 300 million by treating psych as primary edge, charts as mere servants. Niederhofer, blown up twice, lost 100 million and 97 on Thai bot illusions. Post-rubble, he locked in 1% stops forever, whispering to himself, survival first or no second chances. Contrast that with the blown-up trader chasing one more, versus you, now armed. Your next trade? Pause. Ask yourself, impulse or edge? That's the pattern interrupt flipping the script. Me, post 50K, I was the struggling beginner no more. Heart pounding through 20% drawdowns, I'd ritualize, breathe, size check at 1%. Journal trigger. Impulses starved, edges sharpened. 6 months later, consistent pro status. Monthly greens averaging 3%, max drawdown capped at 8%. Hope explodes when you connect it. Psychology beats strategy every time. Survival enables success. You're not fighting charts. You're taming the beast inside. This is crucial. Heroics kill, consistency crowns. You felt the tension, that rush, overriding rules. The pit in your stomach at Reb screams. Now, explosive satisfaction. My 50K scar, it's your blueprint. No more career-ending spirals. You've got the map. Now take these steps to own it. You've got the map. Now lock it in with these non-negotiables. First, cap position sizes at 1%. No exceptions, even when you're sure on a 1.0850 pin bar. Journal every trade daily. What impulse whispered like FOMO at 8:10? What edge shouted back? Sunday rituals? Review your week ruthlessly. Spot psych leaks before they flood. Simulating double-sized losses. No more blaming markets, you hear me? Own your impulses, like Lipschutz did, scaling $12K to $300 million by psych-proofing every move. Williams? He nodded to the same. Trade your beliefs, not the tape. You're the consistent pro now, not the blown-up chaser. Think about it. Your 50K blueprint turns scars into shields. Journal your last 5 trades today. Spot that one psych leak, like an oversized revenge urge, and comment it below. We're in this tribe together. Survival enables success. Trade like an elite. Psych edge wins.